Hi, good afternoon, traders. John Caruso coming to you here from the afternoon of August 9th. We're going to do a quick currency rundown for you here today. First, we'll review some of the incoming data that we saw this morning. We did see some inflation numbers that came out. The PPI, Producer Price Index, came out flat at 0.0. The market was expecting 0.3%. That was month over month. And year over year, we saw it decline 0.1% from 3.3. Where we were expecting 3.4, so that final number was 3.3 year over year. Some soft inflation numbers. I was actually kind of shocked of it. If you look back, the inflation numbers have been pretty steady. So that's a soft reading on PPI. Tomorrow we're going to get consumer price index that comes out, so we're gonna check in on inflation tomorrow with that as well. Fairly muted reaction from the stock market, albeit a bullish reaction. The S&P 500 is up 0.4%. I think last I checked. We're up about 4 points. The NASDAQ right now up 0.4%. Both indexes right now are signaling immediate term overbought. However, we are still certainly bullish trend. But over the course of the next 3 to 6 months, I'm not quite bullish on US indexes from here, but that's another story. Looking at the US dollar, we are up 40 points today. The US dollar largely remains in control of the currency space. If you run through the checklist right now, looking back, you've got strong U.S. economic data. You've got a hawkish Fed. They're set to raise again in September. And right now, the odds of them raising in December are about 60-40. And you've got a slowing Europe and slowing Chinese economy as well. So you got a trifecta right there for the U.S. dollar, and that's largely why we've been trading higher since the spring. The trend is certainly up, albeit we are kind of just largely in a range right now, from about 93.50 on the downside to 95.50 on the upside, and we're just kind of chopping in that range with a bullish bias. So if I had to make a recommendation, just manage that trading range right there. That's what you want to look at doing, and certainly keep a bullish bias on the US dollar. Looking at the euro, the flip side, down 70 points right now. The euro's just been getting absolutely clobbered since the spring. The ECB actually just did come out, and they in the overnight, they're just starting to begin to acknowledge the fact that their economy is slowing over there. We've seen GDP growth decline across the region. We've seen inflation decline largely for the better part of the last 4 to 5 quarters. And if you've been trading on our desk here, this is a call we've been making since last fall, that Europe is set to slow, and we're certainly starting to see that reflect in the euro currency. Certainly the trend in the euro is down. Much like the dollar, we're just kind of chopping in a range right now. I think you want to manage about 114.50 on the downside and about 117 on the upside until we start to break either lower or back to the upside for some unknown reason. At the moment, we can establish a new trading range. The British pound, real quick, we do have a GDP number coming out right now, and we have seen a falling wedge on the chart in the British pound, and we are at the bottom of that range, so it would not shock me to see a short cover bounce from present levels. And looking forward over the next 2 to 3 quarters, we actually do, just as based on the tools and the predictive models that track the economy over there, we do largely have a pretty good picture as far as economic growth is concerned for the UK in the back half of this year. So keep that in mind. Once again, I'm going to go back to the economic cycle. We did see a GDP number of 4.1% last week, or I'm sorry, 2 weeks ago. We actually do believe that is a peak cycle number, and that the U.S. economy could be set to slow in the back half of the year. So if you want more details on that, give me a call at the desk, 1-800-669-5354, and that should do it for today. We'll catch you on the next time.